Good morning. It's Wednesday, August 27th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So my partner, Bill Baruch, he'll be joining CNBC's halftime show at 11 a.m. Central Time for the full hour block in studio. If you are interested in active wealth management, Blue Line Capital is the solution for you. Feel free to send an email to me at phil@bluelinefutures.com if you'd like to learn more. Now, checking in on your setup on the metals and the markets here overnight. Equities, they are edging higher, while metals, the complex is firmly in the red. So as Trump versus Cook and the Federal Reserve, that drama unfolds here, traders are really shifting towards earnings releases. We've got Nvidia's earnings announcement after the close. And why is Nvidia important? Well, the S&P 500, it's got about an 8% weighting. You go to the NASDAQ, it's about a 10% weighting. So you look at Nvidia's option traders, they expect about a 6.1% price swing following the earnings announcement. This actually is the smallest expected movement since May of 2023. And traders are watching Nvidia's results for signs of sustainability of this AI boom and the potential effects of the US-China trade tensions on revenue growth. So revenue projections, they vary widely, and the implied post-earnings swing is really that lowest in 2 years. So you look at hedge funds and systematic buying in global and US equities, it really picked up in August on the back of the collapse in volatility, and the share of stocks in the S&P 500 trading above the 200-day moving average sits right around 70%. So that's the highest since coming into the election last November. We're also going to have some earnings announcement from CrowdStrike and Snowflake. You look at economic data coming out, no real major releases are scheduled. So the S&P 500 up about 2 3/4, the NASDAQ up about 9 3/4. You look at gold down about $8.50 after running up to about 34.44.30, just below that 34.50 mark. 34.50 is important because you look at it more like the potential for a break back out and a retest of the all-time highs here. Now, prices are declining overnight as investors are considering that potential legal conflict between the White House and Federal Reserve Governor. The lawsuit is expected to clarify the degree of control that the White House has over the central bank, with the ongoing concerns about that independence here. So you look at the CME's Fed Watch tool, bookmark that. Google CME Fed Watch tool, put it up on your radar here. Something I check on a day-to-day basis here, as well as ETF flows and things like that are going to impact our positioning in the metals markets. So you look at that September 17th meeting, you'll see there's about an 87.3% chance of a 25 basis point interest rate cut. What you want to look at is the rate of change on that, because a week ago, it now has jumped up about 5%. There's a 12.7% chance that they leave rates unchanged. Now in October, there's a steady 42.9% chance of an additional 25 basis point interest rate cut, which would lower that target rate to about 3.75 to 4%. So what we're seeing here is the yield curve, it's steepening, and gold likes that. So that's the gap between short-term and long-term treasury yields. They are widening as investors are worried about an earlier than expected cutting cycle. So that's where they come out aggressively with September and October. And this comes as inflation is rising. You're gonna see it fuel inflation while growth slows and the confidence erodes in the Fed. So this could set up a stagflationary environment, which we're already currently in, and the safe haven scenario that could boost demand for gold. So what will happen is you'll look at foreign governments, they'll be concerned about the Fed's independence and buying some of the treasuries, and what they'll look to do is they'll add more things like stable coins, cryptocurrency. They'll also add more gold. Now you look at things going forward here, investors after this Nvidia announcement, Nvidia is really important because a lot of times you'll get, this is on the bearish side, when equity markets collapse and are caught off guard and you get volatility, you'll get that safe haven demand surge out the way right away. But then what you'll see is you'll see this disconnect where you'll see gold prices go up and you'll see the industrial metals and the ones that we care about, things like silver, things like copper, platinum, and things like that, are going to be weighed in because of the drawdown in the US equity markets. Now, I'm not saying that Nvidia is going to crash and the US equities are going to crash. What I'm just telling you is these are observations that I've seen in the past. And with the gold silver ratio sitting back at 88 to 1, we get down to about 86 to 1 here. It does open up that trap door where we start to see things where gold futures pull away from the silver market. Again, not bearish on silver, Don't think that, okay? So I just wanted you to be aware of things that are happening. Now you go to silver. Well, December is now the front month. So if you look at your trading screen or you look at any kind of charts out there, you're gonna see that there's a gap on the charts. No, there was no new breakthrough in silver demand or supply squeezes or things like that. It's just your futures contracts rolling over from September to December, and there's about a 50-cent differential on that. Now you do have silver prices down about 0.75% overnight, and a lot of times what will happen is when you get silver, and this has also been my experience in the past, when you get things near the top end of their range where they've been, and you have to roll contracts over, a lot of people will have roll hesitation. What they'll do is they'll try and time the roll, and we've done this many times in the past where they're selling that front month contract and they're putting in a dip just a bit lower on that futures contract, trying to make some headwind and some gains here or some tailwinds behind that differential and that 50-cent rollover here, because on a mini contract it's going to be $500. On a large contract, substantially more. It's about $2,500. Now you do have copper futures down about 1% and edging lower, also weighing in just a bit on that silver market here, as the dollar here has pushed back up. 98.60 last at a dollar, a bit of a sell-off here in some of the foreign currencies, and this comes as yesterday we saw a big sell-off in the dollar, so futures are naturally snapping back about 0.5% here. And you'll look to see here that China's industrial profits, they fell by about 1.5% last month compared to a year earlier, marking the smallest decline since they began decreasing in May. So what the data really suggests is that Beijing, their efforts to reduce overcapacity is having some effect on some of these metals. So instead of just constantly buying a lot of these metals, what they're doing here is pumping the brakes, distributing some of the metals out here and taking down that overcapacity. And it's that throttle that they're easing back on a bit, just weighing in a little bit of prices in conjunction with the higher dollar and also futures being at the top end of the range. So you look at 10-year treasury yields just edging ever so slightly higher. Euro currency, yen, and other outside futures in the currency markets making new lows could continue to weigh in on this market just a bit more here. You get down to Bitcoin just slightly lower, Ethereum just slightly lower after a nice little boost here on Ethereum up over that Bitcoin market yesterday, really jumping up quite a bit here. So the demand continues there. Volatility index just a little bit higher here. And then you look at WTI crude oil prices. Well, they've declined as investors are starting to weigh in the start of this higher U.S. tariff on Indian goods, because the nation does import Russian crude oil. Now, some of the exemptions that they've put into place here with regards to India, like iPhones and things like that, is what is causing the stock market to avoid any kind of sell-off here because of those concessions that have been made. Now, if you look at Europe and Asia, well, European stocks advanced here. Asian trading, the Asian stocks slipped. We had the MSCI just edge a little bit lower. And then you get into the precious metal, the ETF flows here. Well, gold just sitting there at about up 11%, only adding about 8,000 troy ounces. So one of the smaller amounts, but on the Bloomberg terminal this morning, I pulled up the long-term chart of those ETF flows, and man, it is really high. It's one of the highest level in years and years and years. So we are pulled off the highest level seen about last week, but we are still hovering and anchoring near those highs. Now you go to the silver ETFs, those are up about 12% with a nice $1.5 million boost here yesterday in those holdings. So not bearish on silver. I'm just saying that roll hesitation, stronger dollar here. Outside markets, maybe a little bit on edge with the volatility. Some Chinese data coming out overnight, kind of weighing in on prices. Keep an eye on copper, which has really been a dead asset in the industrial metal space. Platinum futures holding a consolidation range here, looking for some direction to break out, potentially to the upside. Palladium selling off, getting back down near that 1100 mark, kind of coming near a longer term support. But if you look at that chart, you do have a bit of a head and shoulders that may have continued and played out here in these markets. I didn't send out a chart back here yesterday, and I'll most likely be starting to send one out here later today. And it's because of the fact that when they roll over from SEP to DECE, I don't want people scratching their heads as far as that gap on the chart. So I've got to smooth things out here a bit. But be sure to check out Bill on CNBC at 11 a.m. Central Time. And again, if you want any interest in active wealth management or some of the research products that we put out or some of the trading ideas that we put out, send an email to myself at phil@bluelionfutures.com. And remember that futures and option trading, well, it does involve risk of loss, and it may not be suitable to all investors. Good luck and good trading.